Is it true that BlackRock, Vanguard, and State Street run big companies, and why is there so little information about them? BlackRock, Vanguard, and State Street are major institutional investors with significant shares in many companies, giving them considerable influence over corporate decisions through their voting power. Their impact is more discussed in financial circles and less in mainstream media, which might explain why it feels like there's little information. For a deeper insight, look into financial analyses and the firm's investment reports. They do not run big companies, but they are gigantic investors in these companies and tend to throw around their influence. Here is an older article with Bernie Sanders' opinion on these companies. HTTPS. Those companies are investment firms. It's not so much that they run big companies as they invest money, and companies who want that money will do what they think will get them investments. There are two kinds of institutional investing. One is just to buy what you think are good investments and hold. The other is to find badly run companies, buy them and run them better. BlackRock and Vanguard have been the former. I don't know about State Street. About 2/3 of their investments are passive investments like index funds where they just buy the market and don't even try to pick winners. BlackRock recently signaled a move to more active investments, but their portfolio is really too large to participate in management of their investments, though they would have a right to do so. No, they are large investment firms that own shares of a lot of companies. If you are a large shareholder, then you have influence on how the company is run. But it does not mean you actually run them. At most you might have a seat on the board. There is also loads of information about these firms. I'm not sure what more information you want. From my personal understand and a little bit of Googling, they exert influence in two ways. 1. Companies with these groups to buy their stocks and will do what they have to appease these investor groups. This leads to companies chasing hot trends even if it does not make the most sense. The flood of companies rushing half-baked LLM models right now to chase after OpenAI is a good example. 2. These companies do have voting shares and can therefore directly control what large companies do. Source.https. There is speculation that the broad ownership of public companies by these firms discourages competition. As an aggregate, it can decrease profitability. I think there is risk there. It's the scale of these monopolies that is a serious issue, the total control that gives them, and the reality no one is benefiting but their shareholders, and they contribute nothing in taxes. All while they use the infrastructure taxpayers paid for. Let's not forget each is corporation heavily invested in the other, so you are effectively talking about one company that owes and controls literally everything, contributes nothing and keeps all their profit for themselves. And let's not forget we will bail them out with our taxes if it all goes wrong again and never see any benefits from. It is a sociopathic form of robbery, not a company. If you buy up 30 of a company's shares, you own 30 of that company. And you have the voting power as such. This is why companies don't normally sell more than 49 publicly. Go to Yahoo Financials. Look up any major company you can think of, and I mean in any industry. Look up who the top majority shareholders. You will see those 3 in the top 5 of every single major company on the planet. They run most media outlets. People generally don't call out their bosses. You're not meant to see who the real man behind the curtain is, just the wizard. Money chasing money. Lots of cash to invest looking for opportunities. Looking to make a killing with the next big thing, be it .com, blockchain, NFT, or AI, biotech. No. They also practically own the government.